Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 12th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you see right here is price push through the 2188s, 2185s. An area that we talked about was very important. When price got a push up here, we mentioned any false move could lead price into support, followed by bulls coming in to defend 78 to 85 were shot at new highs into 2240, and what I mentioned in the trading room was 2257 to 2260 as well. So 2257 to 2260 is a very important area of resistance right now. You can see that just on this chart here, this is Brexit. This is the Brexit key range right here, the 2-day reaction down. Then you had the reverse back up. This is your 50% of the Brexit key range, and then right here, that is your 100% of the Brexit key range. So that's 100% expansion from that range, bouncing off the 50 in the process as well. So very nice. It's played out perfectly. This is the reason why I've kept that key range up over the last several months, is because it was a very important impulse move that the market created, and from there, we were able to watch each of these levels here for signs of a great movement, clarity, and that's exactly what you want out of a key range. So very nice movement into 2257 half. 2260 is also a key target as well. What I mentioned in the room is there could be more upside overall heading into next year toward 2376, and that is the 100% expansion from the edge of the wider range from last August. So that could be a big time move into that zone. But for now, what could be happening here short term? Let's look at the short term chart. Just over the last several hours here, what you see is after price pushed into that zone, it's already been rejected. And right now, price is already trading back below the previous session's close and high, and we're right back below it. So far we're seeing rejections. So far this could turn out to be a rejection day. I know it's very early. We still have an hour before the RTH open, but this thing could still play out in that manner throughout the session. Any rotation to 57 and 60 likely to be defended for pushes lower. In the next session, we could see a day or two that defends ahead of a push backward. If this is an impulse move from this low, impulse move up to this high, then perhaps we'd be looking for a midpoint reversal toward the midpoint of that move as well. That could give you right back into this confluence right there. So we could be looking at some nice movement ahead, as this could become a rejection day, but we got to continue to watch for signs that the bears are defending and rejecting prices above 57.5. If we take a look at the intraday time frame here, here it goes. Again, what we're looking for on any given day is rejection, and what I also oftentimes tell our traders in the room is that you don't have to anticipate it. You don't have to guess it. You don't have to be the top one there. Sometimes you wake up and the rejection's already occurred, and you can see that. Price rallied in overnight trading. It hit the R2, 50% expansion from the previous session's range, and then rejected back below the close and high, and then from there, that's where bears have been absorbing right off that zone. So there are buy stops above 57, so if price were to push above that zone, we could see a move into 61, 60, 61s. But overall, I think any rotation above this zone, above 55, above 57, or into 60, will likely be defended by bears for a shot at seeing greater weakness ahead. Any acceptance or a close above this 55, 55 half, 57 half would be very important and could lead to much more strength. So continue to watch that level as a pivot today. Okay, let's take a look here at crude oil. Crude oil has finally done what we've been talking about in our room for some time. We've been talking about the attempt at pushing beyond 52s. We've been trading in a range for some time, 52 down to about 39. When you trade in a range over time like that, at some point you got to see range expansion. What I mentioned before, you're either going to trade from 52 up to 62, right? Or you're going to trade down below 35, 39 down into the 20s. And we've already done that. So the next wave is up, and right now it's above 52. And what I mentioned before is once we squeeze through 52, it's probably going to go very quickly into 54, 56, very, very quickly. And here you can see it went to 54.5, and now we're trading those prices, which have not been tested in quite a while, nearly 2 years. So big time move here to the upside. 54 is a key level of ours, and you can see the volume profile getting thin up there as we approach that zone. So you can see that's why we're seeing a little bit of responsive sellers come in. Basically, this is going to be very important because even if we do see a pullback, bulls are going to need to defend 52s, keep it a floor, and keep searching for that impulse high. So this could be very, very important how this plays out here. If bulls can keep this thing above 52s, we could be looking at an overall push back up across the range, again, toward 55, 57, 58, 62, all the way across these key levels. All right, let's take a look at the intraday time frame. On an intraday basis, very typical what you see. Sometimes you see a big gap up and a big run in overnight trading, and then it just goes flat up here and holds. Meanwhile, you see basically the development of a great LVN there, just a big time LVN. But at times, this LVN is too wide. You may need to come in here and trade some of this, and it'll clean it up and form a smaller LVN. But right now, the market is from 53.40 to 54.60. Bears are looking to defend the LVN on the opposite side of the range up here. Bulls looking to defend the LVN on the opposite side of the range down here. Basically, any LVN on the way up here is considered support, and any failure to hold that level could auction prices back across the range toward 52, 42, and perhaps all the way down to 51, 34, 32. So we could be looking at more pushback across the range if we cannot hold this support area. So right now it's a trading range market, but this thing could lead to much more strength ahead again if it can continue to hold overall above 52s. All right, let's take a look here at gold futures. Gold continues to trend lower. You can see the intraday chart right here, just a downtrending channel. That hasn't changed. Look at this right here. You can see bears defending the previous close. That's the previous week's close being defended, defended, defended. This latest defense is occurring with higher lows. That could open the door to a squeeze. If it does squeeze, I wouldn't really try to get it past 72 to 74. That's a thick area with clear zones up here where it had been rejected already previously at those levels. So that's a nice little magnet. So if it were to squeeze above 62, 72 to 74 is the next zone up. But overall, this thing continues trending downward. So again, if you're looking at this thing from a higher time frame perspective, it's just a continued downtrend. Prices are having a lot of trouble finding support. There have been short-term reversals and short-term bounces, but these one-day bounces have been met with selling pressure. Here's a one-day bounce, boom. One-day bounce, boom. One, boom, 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 one, boom. So here's our little bounce. We've seen that plenty of times, but Tuesday, look to sell it perhaps because this thing just has not had much luck finding any bids lately. So it's just a downtrending market. Short-term, we could see a day trade up, but the swing move has been down. All right, let's take a look lastly at the NQ. Here's the NQ. Basically, the NQ, very similar to the ES up here, testing major levels. You can see right here, 49 is a big time level. Here's our 48.80 level. And I mentioned every time price closes, we sell it. Every time price closes above it, you sell it. Price closed above it, you sell it. Didn't close above it here, but we still sold it anyways. And then right here, what I mentioned Friday, we're likely to close. We could come up here and grab a little bit toward this high, but overall, the idea is to fade it again. And right now, you can see that it's been faded. It's back below 80 already. Big time rejection above 4,900 at the previous session's high. And again, this area has been thick with sellers. So this could be, again, another area where anything above 4880, 4900, anytime price goes into that zone over the next day or two, it could be a great area to absorb for a swing move back against the range. Again, the highest odds trade is always back to value, 4804, 4800, with a shot to see a move across the range toward 47 to 4730. So right now, again, we're seeing signs of rejection, and it could lead to more weakness across the range. 4,900 to 4,880 is the key zone to watch. So if we're looking here at the intraday time frame, Again, you can see the rejection already occurring here. And in after hours overnight trading, price rallies, it rejects, it goes offered through the previous close and high, which is 97 to 94 quarter, and we sold off. We've never come back to that level yet. Typically speaking, price will come back to that zone, and that's where bears will defend several times before perhaps you see a drop. So right now, the major pivot's going to be up here between 94 and 97. We also have 48.80 here, which is a short-term area, but again, anytime you sell off like this and go off or through these key levels, you typically come back to retest them, and that could be a point of contention there. So keep an eye on that area. Again, the over-under today is going to be 48.80. 4,900 is a big-time level up top. We'll see if this day begins to line up in terms of a rejection at these levels, because we could be seeing a nice pullback toward 4,700, which could be 180 points from here. So nice move again coming, perhaps. All right, let's see how this thing plays out as we head into the new week of trading. Good luck and trade well.